the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Yes, and we have in the studio with us Charles Tobey, the chairman of Century 21 Australasia. Charles, great to catch up with you again.
Thank you, Steve. Good to be here.
Week on from the election, what's the mood of the country in regards to real estate?
Yeah, well, I think he would have been surprised with the clearance rates as I was. In any case, watching the massive change there, the interest around the economy or the people looking in the real estate economy are far more upbeat. There's no change. They have to go through any change. They have to wake up and decide which way they're going to invest or whether they don't invest at all. It's business as usual. I think that was the biggest thing. And then we watched the clearance rates in Sydney hit 69.9%, which was massive compared to this time last year. And even Melbourne got into 62.9. We're not talking about a small number of auctions either. 971 auctions for Melbourne and 697 for Sydney. Even the Adelaide market hit 57.5%. So it really is quite extraordinary when you think of what all of the people were saying, all the property pundits were saying that the market was going to crash. It certainly hasn't done that.
You just wonder what it would have been like if Labor had won, though, and we were staring down the barrel of negative gearing being limited to new property. I would have thought the sentiment might have gone the other way.
I absolutely think so. And everybody I spoke to, though, and I don't know, you speak to a lot more people than I do, and many of the people I spoke to said that they were voting Liberal. So I was scratching my head trying to find a Labor voter. So I even thought for the first time in my life I might have a bet that Liberal would win, which was very strange given that even the Labor Party, saw the photos, they were taking photos as though they'd won the election. It was very, very strange, very strange.
So the Victorian government handed down a budget today. We spoke with the Car Advice boys last hour about how they've whacked an extra 10% luxury car tax on top of an already existing luxury car tax plus GST. They're also going to stick their hands into the pockets of foreign property investors. They're going to increase the stamp duty, I guess it is, from 7 to 8% from the 1st of July, and that brings it into line with New South Wales, does it?
It does, not completely, but it's disappointing in many respects that the easiest way to raise revenue is to tax rather than to find ways to increase the stamp duty opportunities for first home buyers or investors. And I would have thought that would be the answer. Investors find it difficult, especially in Victoria, because the legislation in Victoria for landlords is far more stringent than it is in, say, New South Wales or Queensland. And so I thought relaxing that might have been a better way to get more investors in, get more buyers in, get more people who want to come through and invest in property. But the easiest way is to raise taxes. I guess my question is and they're expecting the market in that statement, they're expecting the real estate market to recover and climb. Will that mean that if that occurs, they'll remove those taxes?
The capital city markets, as you said, the auction clearance rates have gone back to property slump levels. What about in parts of regional rural Australia? I mean, an area you know well, like the Southern Highlands. I mean, is that a place where you might perhaps these days be able to get a bargain?
I don't think you can get a bargain in a lot of those areas, Steve. Many of those areas are owned by people who have either retired or have the cash and bought the property with cash as a second property or a country property, and they're not going to sell those properties if they don't have to. So that sort of area is not an area I'd be seeking bargains in. There are certainly some coastal areas where bargains are still to be had, where people might have bought their holiday home and it might have been a stretch for them to buy it. But the Southern Highlands of Sydney is well and truly alive. I mean, it's not as active as it was, but people aren't selling if they don't have to. Is
that a good place to invest?
I love that area. I've got an interest in that area and beyond. So I know I've watched it grow over the last 20 years. I've invested in through the Highlands and down through Kangaroo Valley, and it was a pretty modest area. But now all of a sudden, with the freeways and the access, Barrel it's gone beyond Barrel. And if you look at some of those areas, even 10, 15, 20 kilometres past Barrel, those areas have become far more expensive, whereas previously you could have bought property for a reasonable value. Now you've got to pay a premium because, again, back to people who don't have to sell.
When you're talking coastal, if you're talking New South Wales, for example, would you be talking about somewhere like the Central Coast, where there has people who've had to give up holiday houses because of the downturn in the economy?
There are still areas up the coast. I think the North Coast offers more opportunity than the South Coast, because I think the South Coast didn't develop or move as quickly as the North Coast did. So I still think Wollongong and those areas have still got strength in the marketplace, as I do Newcastle. But as you start going further up past there, you start to get into areas where there aren't as many buyers. And I think there's definitely opportunity. And you go up to places like Byron Bay, as an example, that far north. And again, if you don't have to sell, you don't have to. And there's a lot of money in that area. So those are the sort of areas people will just hang on to their properties if they can't sell them for the price they want.
I saw a place featured in Domain magazine at the weekend on, I think it was on 3 hectares out of the back of Byron Bay, out in the hinterland there. It was a 5-bedroom house with a swimming pool.
Yeah, look, I recently saw one where a gentleman, I'll leave his name out of it, but he just paid $18.5 million for a holiday home in Byron Bay.
What?
So $18.5 million for a property in Byron Bay. And he's a businessman that many people would visit his businesses. And I did send him a text asking if I could borrow it for the weekend, but he never responded. So I'm out.
Reserve Bank's going to meet, I think, tomorrow week. The feeling is, and I think the Reserve Bank governor has given the government a pretty big hint about this, that they might actually cut rates.
Look, we thought this last time I spoke, last week, last time the interest rates were being touted as reducing, we thought that was going to happen then. And I think it's pretty much there. In fact, I rang my banker, and this is, I hope my bankers don't get upset, but it's not a bad tip for people. I rang my banker today, actually, a couple of them, and I said, look, I think it might be time for you to review my interest rates. And they went, oh, okay, we'll come back to you. It wasn't a no. So I think if you look at that situation, there's definitely an opportunity for people to go and revisit and talk to their bankers and see if they can get a better deal.
Great advice, Charles. Thank you, mate. I'll talk to you same time next week.
Thank you, Steve.
Charles Tarby there, the chairman of Century 21.